Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, and my two co-hosts are not here, but we have a special guest who's coming on. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And they are open for business. Check them out. Let's see, today's trivia theme is Disney songs. So if you know the answer to all the Disney songs, you can give us a call and try to win the tanning certificates. Our special guest today is commercial real estate broker Scott Gerber. Scott, welcome to The Best of Investing.
Thank you, Edward. Good afternoon.
All right. So now I've known Scott for a few years because we go to a commercial breakfast once a month when we were doing it in person. Now we're just kind of doing Zoom. And Scott, you're actually one of the top brokers. Every time I go to the meeting, which has about 80 brokers come to it each time, you always seem to have all kinds of sales and announcements, and people come to you for advice.
Well, I thank you. I won't disagree with that.
Okay. I love every time you come out and you say, our spring selection coming out. I like that. Now, your
spring collection, actually.
That's right. Now, your specialty is multifamily, right?
That's right.
Okay. And what is your territory, generally speaking?
My primary geographic area, Edward, is Marin and Sonoma counties.
Okay. All right. Why don't you tell us, give us an update. What is going on in the marketplace right now? Because it seems with COVID and all these rules going on, what highlights can you share with us?
Well, there's 2 sides to the business. There's the rental side, like what's rental activity, what's happening there. And then there's the investment side, the sales side.
Okay.
Which would you like me to talk about first?
Let's talk about the rental side, because there's all kinds of news in the paper about people not having to pay their rent, or at least having it deferred, that sort of thing, and rent control.
Right. As everyone knows, just a broad part of America is widely affected by this pandemic.
Yeah.
And it's heavily impacting rental housing households. People, the working class folks that live in apartments, are struggling. They're hairdressers, they work in nail salons, they work in restaurants, they're bartenders. Or they work in a field where the business is narrowed down or shut down entirely. So the burden is falling on rental property owner. Well, obviously it's primarily falling on the people that aren't making money.
Sure.
And those people are not able to pay rent, so it's then falling on people that own rental property. The 5,000-foot view of this is where we work and live in Marin and Sonoma counties. It's very, properties are close to 100% occupied. They're 95 to 100% occupied. Okay. Most of the tenants are paying rent, but some of the tenants can't pay rent. So the general situation with respect to rents is they're not what they were 2 years ago. Okay. Rents have flattened out and gone down.
Down by what percentage have you seen?
Very nominal. Okay. Probably
5%, or
I would say last year rents flattened out, kind of 0% rent growth in Marin County. Okay. And 0% rent growth in Sonoma County. Okay. So for 2020, we didn't see any rent growth. In the previous year, we saw little to no rent growth, and depending on the community or the segment of the market, some areas were up and some were down. So what I do, Edward, is I track 18,000 units in these two counties, and I do it 3 times a year. So we know exactly what's happening all the time. And so we're able to watch the shape of the curve when rents are flat, going up, going down.
Okay.
We're able to be right there and tracking exactly what's happening when it's happening.
Let me ask you about COVID though, because it's obviously a big point here in the marketplace. Do the tenants have to prove that COVID has affected them, or all they have to do is just say the word COVID and they get a deferment?
There's an actual affidavit. There's a piece of paper that's where tenants have to. And by the way, I'm not a lawyer, so I can't tell you I know every aspect of this, but what I do know is the tenants do have to prove financial hardship due to COVID.
Okay.
And at the very least, they have to sign a sworn affidavit. So it's under, penalty of perjury if they're lying. So that's kind of the process going back to 2020.
Yeah.
I forget why, I think it started in June, when people that were impacted, if they weren't able to pay rent, they had to file an affidavit.
And that's fair, because it's unfair to the landlord to just yell the word COVID and suddenly you don't have to pay your rent. Tell you what, Scott, stay with us. We're going to cut to our first commercial break here. And as a reminder, if you know the answer, don't say anything. We'll let you answer when we come back from break. Okay, so here is our first trivia question, and the theme is Disney songs. All right. Which Disney movie has a song called When You Wish Upon a Star? All right, that's a very famous song, but which Disney film does that come from? Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate, which is worth, by the way, over $100. Again, trivia question number 1. Which Disney movie has a song called When You Wish Upon a Star? All right, stay with us. You're listening to The Best of Investing. I'm Edward Brown. Our special guest, Scott Gerber, who is an expert in multi-family real estate. Don't touch that dial. We'll be right back. Welcome back to The Best of Investing. Again, I'm Edward Brown. My 2 co-hosts, Mark Hanf and Nam Phan, are not here today, but we have a special guest, Scott Gerber. First trivia question was Disney theme. Which Disney movie has a song called When You Wish Upon a Star? Scott, you know the answer to that one?
I don't, Edward. If it was a 1960s classic rock question, I might know the answer, but I don't know the answer to the Disney question.
Okay, this one is Pinocchio. I think that one, the little Jiminy Cricket says, I think that's what he sings it to him. All right, so Scott, you're quite an expert in you're a commercial real estate broker specializing in multifamily. And, I'll tell you, one of the things that frosts me when I read these articles about how, landlords are kind of being forced to, not raise rent, can't kick people out for non-payment, et cetera, et cetera. Part of me looks at it and says, okay, a lot of we're not talking generally that all these landlords are these super wealthy corporations. There's a lot of mom and pops who live off that rental income. And so I look at it and I say, well, if you're going to do that to them, then either the government, when they write their stimulus checks, should write it directly to the landlord to pay the rent, because that's theoretically one of the things that they should be using the money for, or the landlord should be able to say, okay, first mortgage, I don't have to pay my mortgage. PG&E, oh, by the way, I don't have to pay PG&E. Insurance, real estate taxes, and all, et cetera, et cetera, et cetera. It's unfair to the landlord to say, you can't get this income, but you still have to pay all these expenses.
Well, you make a good point, Edward. Part of the problem is people's inability to pay rent. Of course, we have people that are, that take advantage of the situation. Maybe they can pay the rent, but technically they don't have to. And yes, we've now got political leaders that are making new ordinances and legislation that gives tenants the right to continue to not pay rent, again, if they can prove it. But if they can't prove it, and they are there unlawfully now and in violation of their agreement, There now are eviction, as you know, there's a national, state, and now there's local, county, and city ordinances preventing evicting tenants. And, you know, that's a problem, Edward. What the biggest problem is? The biggest problem is legislation is getting written that prevents eviction, which is the only reason people want to get rid of a tenant is because they're a problem.
Yeah.
No, because they're a problem.
Gotcha.
So they have a dog that's attacking other tenants because they're throwing parties at midnight, because they're dangerous to the rental housing community. That's the only reason. You know, these are our customers, and we love them. We appreciate them, and we love them very much. But what we don't love is when some guy in one unit impacts the ability of 9 people to enjoy their apartment, and that therefore impacts our ability to operate our businesses. It's just like a restaurant. You have someone who's preventing everyone in the restaurant from enjoying their meal, no one's going to come to the restaurant. So the eviction ordinances that are getting passed now by our political leaders that are really trying to respond to what they think the community wants, which is to protect people, are damaging our ability to operate housing, and it's backfiring. It circles back, and now in those communities where there is a problem tenant who is impacting everybody's right to enjoy where they live, we can't get them out.
Yeah, you'll love this little story about a problem tenant. We had this one gentleman who invited a friend to a barbecue, which we didn't sanction, but we didn't stop having, you know, they can have a barbecue, no big deal, right? Well, that friend invites another friend. That friend decides it would be fun to throw a bullet into the barbecue. Well, what ended up happening is, sure enough, the bullet came out, ricocheted, and fortunately, it only grazed this person. But can you imagine? I mean, you know, guy could have gotten killed from it. And so, yeah, there's it's really kind of annoying when all these rules, they kind of assume that you've got a Simon Legree, you know, twirling mustache, putting people under railroad tracks, landlords, and that's not normally the case. I mean, my attitude has always been with tenants, thank you very much for being a tenant because you're helping me pay my mortgage. What can I do for you? You know, and I think a lot of landlords
we love our customers. It's that simple. You know, we want all, you know, rental housing providers want to do is to be able to provide rental housing to people. That's how we make a living. You know, what isn't helpful is when we have, like I say, more hurdles to not just us operating current people who own property today, but what it does is it creates disincentives for people to build new housing.
Exactly.
And so, you know, I love the fact that London Breed, the mayor of San Francisco, said these words, and I love what she said. She said, we don't have a housing crisis, we have a housing shortage. And that's exactly what it is. It's a housing shortage. So everybody's upset, and rightfully so, that rents went up so much for so long. But now they've come down, and you know, I have 24, 26, and 29-year-olds that all rent apartments, and guess what? It's a renter's market in San Francisco and Oakland now, and it's gotten a lot easier in Marin and other places. But I digress. We need to make a living, and we need to be able to operate these properties. And in COVID, what we don't need is knee-jerk reaction by our political leaders that creates hurdles and disincentives for people to build more apartments, because really that's what we need. We have a housing shortage, not a housing crisis.
Good, very good point. Hey, by the way, before we cut to our next break, how do people get a hold of you if they have questions about apartments?
Thank you. I thought you never asked. My email is easy. It's Scott, S-C-O-T-T, at scottgerber, Gerber.com, or they can call my phone at the office at 415-927-8888.
And just to kind of give you a little plug, again, I've known Scott for a number of years by going to our brokers meetings, and I got to say, you're one of the top salespeople. You know, you get your listings, you get them sold. You must know what you're doing, and you do a great job of it. I got to say that.
Well,
okay.
we have a saying in the office. The truth will set you free. we, we we like to treat people the way we like to be treated, and we like to tell the truth. It just seems to work, and it's a lot simpler.
Absolutely, all these biblical quotes, I just love them. Okay, here's our second trivia question. Again, we're talking Disney movies here. Which Disney movie has a song called "Be Our Guest"? Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate. Again, we're talking Disney songs here. Which Disney movie has a song called "Be Our Guest"? All right, you are listening to The Best of Investing. When we get back, I want to ask Scott about how sales are going, cap rates, and all that other kind of fun stuff regarding apartments. Stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. One more time, I'm Edward Brown, your host, and my special guest is Scott Gerber, commercial broker specializing in apartments. Second trivia question, which Disney movie has a song called "Be Our Guest"? Scott, you know that one? Be our guest.
You know, I'm gonna have to say no. I don't know.
Okay, that's Beauty and the Beast. So unless you got little kids who saw the movie, I will give you a pass on that. Okay,
it's been a lot of years since we had the Disney movies.
Disney movies, that's okay. All right, so we talked about rentals. Let's get into sales. How are sales of apartments going in your neck of the woods? What kind of cap rates, that sort of thing?
Edward, sales activity is pretty steady. They're, as you probably know, since this is a real estate investing program, there's a lot of money looking to be deployed.
Yep.
People are looking to invest and make smart investments, and apartments have been a very popular vehicle for that for as long as most of us can remember, and certainly recently. But everything, because of COVID, everything's kind of compressed. So most people's business that I talk to throw a very broad number out, is down by 40%. That my business was down by 40% last year. There are less transactions. There's less activity. That being said, business is being done, and it's interesting because what we just talked about is these lenders are thinking about income streams that could go away if all the tenants decided to say we can't pay the rent.
Exactly.
So that's a challenge that we have, but we've fortunately been able to overcome it. Because we have clients that are well capitalized, that have significant cash. So typically today, if we're doing a transaction, it's 50% down. That's really pretty high.
Yeah.
It eliminates a lot of people from the market, and maybe that's one reason why business is down by, a pretty big percent. So there's been reasonable transaction activity, but it's not down by 70%, but it's down by quite a bit.
Now, how are the owners who are potential sellers? Have they taken it off the market, properties off the market because of COVID? Because they realize they're going to get hammered, or what's been going on with that?
What I've described it as it's this kind of a bullseye-oriented market. In other words, properties that are attractive and or attractively priced or reasonably priced are getting interest, offer activity and interest.
Okay.
Properties that are either not particularly attractive for one reason or another, maybe location or style or both, and are not priced appropriately, are getting the activity drops off exponentially.
Yeah.
So something that's attractive and well priced, like the building I sold in Belvedere on the Lagoon last year.
Oh, wow.
We sold 22 single-story homes that looked like houses but were apartments for around $23 million. That was a big ticket. Sure. And a record in the county, but we had 4 written offers, and I thought if COVID hadn't happened, we probably would have had 8 or 10 offers. As it turned out, we had 4, and we had a good buyer who closed the transaction. But so there's an example. Somebody had to come up with a lot of cash to close that deal.
So let me chime in here because Belvedere, for those who don't know, is probably the most expensive area in Marin. I got to think that COVID might not affect that property as much because generally speaking, the people who are going to buy those kinds of or rent those kinds of apartments, the rent's got to be super expensive, and those people, they don't work at restaurants and other places that have been laid off. Wouldn't you agree with that?
Interesting. You should say that. Actually, 2 or 3 of the tenants claimed that they couldn't pay the rent. Interestingly, one of them was I'm not going to say what kind, but like a medical professional. But what we did see is when people left, the people that were moving in and their rental activity is people coming out of San Francisco, high density housing. They didn't want to be around people, very nervous about being around a lot of people, human contact.
Sure.
So coming out to suburban locations, a single story building with a garage you drive into, or just, being able to have your own entrance to your apartment rather than walking down a hallway or through an elevator. That became very attractive. So, those are the kind of properties that both renters like and investors like.
Well, especially and if those renters, suddenly they can start working from home. They don't have to go all the way into the city for their job. So I could definitely see that.
Yeah, no, that's exactly right. We have apartments in Petaluma with garages and townhome configuration that tenants love because they can just drive in and, they're big 3-bedroom apartments. It's like a home. And so, we've had people come from the city and they just love it because it's inexpensive and there's space to spread out.
And even the ones in Belvedere, it's still their kind of apartments. So there really wasn't much yard, was there?
There was a yard. Yeah, there was a little yard. And it was on a lagoon, by the way. So 16 of the units had boat docks and, you could take your kayak out.
How much was the rent on average?
Rent was about $5,600 to $6,500.
That's not outrageous. Unless it's a 1-bedroom studio, that's actually very reasonable.
No, they're 2-bedroom, 2-bedroom, 1 bath, and 2-bedroom, 2 bath.
Really?
Like ranch style homes.
Wow. It's funny. That actually surprises me that it was that low. That buyer. It sounds like.
The buyer may have another, idea about upgrading them and maybe increasing, what the rent price is. But that's what it was.
What did he buy it? Like a 2.5 cap rate or something?
No, it actually was. It was a hair above 4%.
Okay, not bad. Okay, well, Scott.
But it was close to $1 million a unit, though. And that's what scared a lot of people away because they just didn't want to put that kind of cash down.
Gotcha. All right. Hey, Scott, before we get to the break, we have to get to another commercial break here. Give out your information one more time. How do people get a hold of you if they have questions about multifamily?
Sure. My name's Scott Gerber with Meridian Commercial. My phone number is 415-927-8888. And email is Scott, SCOTT, at scottgerber.com.
Great. Again, Scott, thanks again for joining us on The Best of Investing. Here's our last trivia question here. Which Disney movie has a song called You've Got a Friend in Me? Call 888-912-1190. First caller with correct answer is going to win that standing certificate. And stay with us. The Best of Investing will be right back. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, and now I'm solo because Scott had to take off. Third trivia question, which Disney movie has a song called You've Got a Friend in Me? That would be Toy Story. All right, so what we want to do here is I want to give what they call the deal of the week since Nam is not here to give it. And generally speaking, what we're talking about here is Pacific Private Money, who's the main sponsor of the show. They provide they provide loans to people who need money very quickly, real estate loans. And normally these people can get a loan from a bank, but usually it's speed that will preclude them from getting a regular bank loan. And so Pacific Private Money can quickly make loans, secured by real estate. And this loan is actually probably one of the better ones, I gotta say. So there's an elderly woman who lives in the South Bay, and her house has an appraisal of 1.2 million. She owns the house free and clear. She needs money because she wants to fix it up and sell it. I'm not sure if she's moving into a nursing home or what she's doing, but she needs money very quickly and to be able to sell her house fairly soon. She only needs $100,000. So what we're doing is we're lending her $100,000 as a first mortgage on a house that's worth 1.2 million, and the interest rate is 8.5%. Plus, we're charging some points. Now, you look at this from an investor standpoint. What are the risks on something like this? $100,000 first mortgage on a property worth 1.2 million. You're talking 8% loan to value. I mean, you've got to have an absolute catastrophe in order for us to lose money on that $100,000. And we're making the loan. It's a 30-year loan because it has to be. She lives in the house, and you have to follow all the Dodd-Frank rules and the income, et cetera, et cetera. And it's technically it's a refi. But the thing is, what we know that she's going to want to sell this house, and she doesn't want to pay 8.5%. I mean, eventually she'd be able to qualify for a lower rate anyway. So we have no problem lending her a 30-year mortgage, knowing ahead of time that she's going to pay it off early because she's going to sell the house, or she'll refinance with a conventional bank if she can't sell the house. So for situations like that, we have a fund that makes loans like this. Now, this one happens to be kind of an extra special one. And if you're interested in investing with us, it's Pacific Private Money, and you can send an email to investor.relations@pacificprivatemoney.com, and we'll get you information on how to invest with us. We have a fund that is currently paying about 7.5%, secured by real estate, similar to these kind of loans I'm talking about here. There is no fee to get in. There is no fee to get out. The only requirement is you have to stay in the fund for a year. Also, you have to be what they call an accredited investor. And that means that you have a net worth exclusive of your home of at least $1 million, or you make $200,000 a year if you're single, $300,000 a year if you're married. And again, for more information, it's investor.relations@pacificprivatemoney.com, and just put your information. Basically, you can say, hey, I heard this on the radio show. I want more information. All right. And there was another loan that we did where this woman also just coincidentally happens to be older. And ordinarily, she could qualify for a reverse mortgage because of her age, and she had enough equity in the house. However, because of COVID, she was a little behind in paying her mortgage. She's still working, even though she was elderly. And unfortunately, the bank filed a notice of default with an intent to do a foreclosure. That shows up on her credit report, and she's unable to get a reverse mortgage to exit out of that loan. Apparently, that's the rules with the reverse mortgages. You can't save your house with a reverse mortgage if the bank has filed a notice of default, or if a lender has filed notice of default. We don't have those restrictions. So what we did was we went ahead and made her a loan with the intent to, she went ahead and paid off the first, actually she had a first and a second mortgage, paid off the first and the second mortgage. She will then be out of the notice of default, and she will qualify for a reverse mortgage, which is great because then she won't have any payments to make on the reverse mortgage. So that's the sort of situation. Again, we run into all kinds of situations where, for one reason or another, the bank just cannot lend the money, even though these borrowers are bankable. And for more information, you can participate with us on these loans and in our fund, making about 7.5%. The reason I say about is it fluctuates a little bit. There is a preferred return of 7%, and then you get to participate in the profits, 50-50 with the manager. And that adds usually about another 35 basis points to upwards of 100 basis points to that 7%. So we've paid anywhere around 7.5, 7.75, 8%. And it fluctuates because every month, February generally has 28 days, March has 31 days, and it's paid on accrual on a monthly basis, basically on how many days there are in a month. We do pay monthly checks. You can either get your monthly check or you can reinvest it like a mutual fund, in that you buy more shares and compound your interest, which will add about another quarter to 3/8% on average. And before we cut to a break, I wanted to totally change topics here. So I have not followed this until recently, just hearing about this company called GameStop, which has been in the news lately because apparently the price has skyrocketed, or it did as of this show. We're recording a few days early, where it used to be, earlier in the year about $19 a share, and now it was over $300 a share, and it literally had gone up, 100 and some odd dollars in one day. And the reason is, I believe, that, well, I don't have to say I believe it because it was in the news, that there was what they call short selling. There was short covering, as they call it. So when someone shorts a stock, they hope the stock goes down. But in theory, their loss is unlimited. I mean, the stock could go to 1,000, it could go to 5,000, and they could lose a lot of money. So as stocks go up, people who have shorted the stock are faced with having to come up with a lot of money to cover that short position. They have to either sell the stock or they have to come up with a lot of money, and they don't want to have this unlimited loss. So what was happening was the big boys, the hedge funds, they were selling. They apparently had shorted the stock thinking it was going to go down, and when it started going way up, they had to buy because a short sale means they sell before they buy. So now that creates even more of a demand, and that ends up pushing the stock through the roof. That's what was going on. So I would think that investors should look at how much is still out there on the short sales, because if it's drying up, maybe then the stock will plummet. Apparently it did plummet during one day, then it recouped. But I don't know how much is out there in the short market right now. But that's one way to kind of, you might make I'm not saying you should do this, but I'm just saying it's interesting that if you look and see how much is out there in the short sales, if that's drying up and the stock is way overpriced, it might start to come down. All right, stay with us. You're listening to The Best of Investing. We're going to be right back with some closing comments. Welcome back to The Best of Investing. Edward Brown here. I'm solo right now. Everyone's gone. That's okay. All right, we did not have another trivia question, but we want to cut out here with some thoughts of the day. Well, before we get to our thoughts of the day, I want to introduce you to one of our other funds. It's called the Pacific Southwest Note Fund, and it specializes in purchasing seller carryback notes at a discount in the state of Texas. Very specialized. And what does that mean? Well, imagine you're somebody who lives in Texas and you want to sell your house, and the buyer comes in, and maybe the buyer doesn't have enough good credit to qualify for a bank loan. And you say, that's okay. It's a $100,000 house I'm selling. You put down $20,000, Mr. Buyer of the house, and I, the seller of the house, will be the bank, and I'll carry the $80,000 first mortgage at 6% interest for 25 years fully amortized. So that looks like a real bank loan. So now what happens is every month, the buyer writes you a check because he's your borrower, and you amortize the loan over the 25 years. And if you keep this loan for 25 years and the borrower makes all the payments, eventually they pay the loan off just like they would in a bank loan. So what ends up happening is that there are people who have sold houses this way, and we solicit the people who own the notes that are earning the interest, the 6% interest. Let's say that in my example, it's a 25-year note, and let's say 5 years has gone by, and the previous owner, i.e. the seller of the note, seller of the house who now owns the note, wants to cash out. They said, yeah, this $80,000 note's been paid down to $72,000, and I think it's time. I'd like my $72,000. Well, what we do is we go in there and we solicit them, but we don't buy the note for $72,000, because if we did, we'd only earn 6% interest. So depending upon, the person, the location of the property, in good condition, et cetera, et cetera. Let's say, for example, we offer them $50,000 for the note. Well, you have to convince the seller that $50,000 is a good price. And the seller might say, no, that's too low, forget it. Okay, done. But maybe they say, well, if you can make it $52,000, I'll go ahead and sell you the note. We say, okay. So if we pay $52,000 for the note, now you look at what our rate of return is, and instead of being 6%, might be 11%, might be 12%, maybe a little higher. And so what we end up doing is buying notes like that and putting them in this fund called the Pacific Southwest Note Fund. Again, there's no fee to get in, there's no fee to get out, it's a 1-year hold, but the minimum preferred return is 9% and the target is 12%. And so far we're very, very close to that 12% for the period that the fund has been open, which has been since August of 2020. So it's a fairly new fund. We've already raised a couple $1 million. Everything's going well. All the borrowers seem to be paying on time. But here's the downside. The downside is we've got a waiting list. So you can still email Edward, or actually email investor.relations@Pacific Private Money and put in a non-binding reservation if this sounds good to you, and say, yeah, I heard about the Pacific Southwest Note Fund. That sounds pretty good. I'm not committed, but I'm interested. And tell us how much you're interested in, and we'll keep you on the list. And when we eventually come to the point where it's your turn, we'll get in touch with you. If you're interested, great. If not, we'll move on to the next person. So investor.relations@pacificprivatemoney.com. All right, we are going to cut out for today. And instead of having thoughts for the day, we have puns for the day. So here's the first pun. I burned my batter this morning. It tasted waffle. That's cute. And I was trying to daydream, but my mind kept wandering. All right, that's enough for the puns. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.